Hello and welcome. You're tuned into MF Corner in the Mumbai studio. I'm Sonal Bhutra. And as we come close to the end of the year, let's talk about some trends that we saw in 2024. In fact, this year saw a lot of action in the mutual fund space, right? And the funds raised by NFOs has definitely been one of them. So let's look at the numbers before we go to our experts on the show today. Funds raised by NFOs or new fund offers stood at 1.04 lakh crore rupees in 2024. This, of course, is still November, and we have more NFOs in the month of December that have not been accounted for here. This is an uptick of 63% versus funds raised in 2023, when funds raised by NFOs were around 63,800 crore rupees, which is slightly lower than 2022. That time the number was 67,336 crore rupees. But 2021 was a strong year for NFOs and the inflows as well, which was double the amount seen in 2020 at 53,703 crore rupees. And if we talk about the number of NFOs, that is, 2022 still tops the list. So far in 2024, 205 NFOs have been issued till November, which compares with 212 in 2023, 246 before that, 140 in 2021, and 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting around 6,400 crore rupees of money, other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds, they saw the highest flows that we've seen in the last 5 years. Sectoral funds garnered around 67,700 crore in 2024 so far, which is more than the flows in the space from 2020 to 2023 itself. And in this period, sectoral funds garnered around 52,165 crores via 59 NFOs. Even index funds saw a lot of interest. 76 NFOs in the index fund space, raising around 12,140 crore rupees, which is the highest that we've seen in at least 5 years. And index funds have seen a lot of interest, more so in last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering 2,700 crores, and this compares with 85 index funds taking up around 11,240 crores in 2022. These numbers are very low in 2020 and 2021, something that you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 24. This space saw a big rally but did not see a new product here, but saw massive flows in the existing names. Also, only one small-cap fund was launched in 2024. And now we are towards the end of 2024. December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual fund houses to diversify the portfolio? Something time will tell, but we have to discuss this phenomenon with our experts on the show today. Nirav R Karkera, the head of research at Fisdom and Mohit Gang, co-founder and CEO Moneyfront, joining us now to discuss the trends going forward and what led to that big rally, I would say the big rush of NFOs in 2024. Gentlemen, thank you so much for joining us. Always a pleasure speaking with the two of you. Mohit, let me start with you first. What explains this big NFO rush and money raised this year via NFOs? This is the highest that we've seen in the last 5 years.
Oh, absolutely, Sonal. Thank you so much for having me on this year-end show. Look, I think money begets money, and it's more like a herd mentality out there on the street. I think there is limited shelf space available with the AMCs on existing categories, right? So they can't any further launch a large cap fund or a mid cap or a small cap fund because they already have one on the shelf, and SEBI doesn't allow them to launch new. So only place where they can perhaps innovate and attract investor fancy is the sectoral and the thematic space, where you don't have any limitation. You can launch as many new ideas as you wish to, right? These ideas sound fancy, they sound quite interesting, esoteric at times, abstract at times, right? So it catches investor fancy. Investors who have been long invested are wanting, really craving for something new in their portfolio, just for the thrill of it sometimes, and sometimes for the right fitment and right placement. But yes, I think getting new money collected in the market becomes extremely easy for the industry per se, for the distributor fraternity per se, and for investors, I think it's just about following the entire pack and just going out and buying something new for the rush of it at most times, and sometimes for the fitment of it.
Okay, all right. Take that point, Mohit. Nirav, come in on this first. Your take on why there has been a big NFO rush. And Mohit mentioned sectoral funds, right? They were the big contributors. But now the markets have come off highs. Most sectors are seeing profit booking. How has this impacted the performance of those NFOs?
So, Sonal, at the outset, one thing I'd like to highlight, of course, we've seen an NFO rush. But I feel this year has been dedicated to an MF rush at a very broader level as well. There's been some sort of a gold rush towards MFs, and this is a part of a structural shift in preference of mutual funds. So there is, of course, financialization of assets, and even within financialization, there is mutual fundization of assets, right? So as a part of this larger shift, NFOs were able to garner a chunky part of capital that has been mobilized towards mutual funds. And this is on account of two things. One, of course, the flows into mutual funds and the interest into mutual funds itself that I just spoke about. The other is the innovative propositions that the industry has been coming up with. Now, of course, in the past half decade, this year alone recorded, very high levels of NFO collections, but you must also appreciate that the most innovative funds also came in this year. In fact, the most innovation came in on both sides of fund management, active as well as passive. In fact, we have seen some phenomenal passive propositions come into the market, right from factor-based to multifactorial funds on the passive side. On the active fund size, we have seen very specific niche themes and sectors being targeted, like energy, for instance, or capital markets on the index side, or we could also talk about automotive as a fund being launched, right? So these very niche propositions have attracted a lot of investor interest in terms of garnering specific and targeted allocation. So that's one. Second, your second half of the question was around sectoral funds. Like any other sectoral fund, one can expect it to be highly cyclical in nature. Returns are generally lumpy, declines are generally steep. These are very characteristic of sectoral funds. And by virtue of most NFOs being sectoral in nature and closely followed by thematic in nature, they have also seen a wild bout of profit booking as well as upticks happening. And this is largely aligned with the very fast-paced sector rotation that we have witnessed in the broader markets as well. So somehow portfolios constructed using actively managed funds were also furthermore actively managed. So there was a second layer of active management that was also in play during the year, because the markets were also highly volatile with a series of trigger events, right? So a lot of these optimizations resulted in many NFOs posting a steep redemption as well as a steep decline in performance. So this is largely linked to the specific sector and the sectoral rotation that happened in the broader market.
Okay, we get that point, Nirav. Point well taken. Mohit, then let's talk about NFOs in general, right? Because there have been so many of them and all of them have seen such good demand. But what's your take? Is this something any investor should invest in? What kind of investors would this be a good category for?
So look, I've been pretty vocal about my views on this one, and I'll not mince any words out here. My firm belief is that if a clown enters a palace, he doesn't become a king just by entering the palace. And basically, the palace turns into a circus, right? And that's what I see happening with most of the investor portfolios. The portfolios are turning into a circus with overcrowding of NFOs in the portfolios just for the fancy of it, right? Look, an NFO does make sense. I'm not outright against it, only if it is a true fitment in a long-term allocation of a client's portfolio, fits with his risk appetite, fits with his time tenor, fits with what his financial goals are, basically, right? And if the theme is so robust and solid that otherwise it was not easy to play that theme, right? So there are many themes like that. Globally, in fact, there are many themes which are available, which is very difficult to play through a multi-cap or a flexi-cap fund. And you would want to play through a sectoral fund. And the last reason for going into sectoral funds could be, let's say, if you really are deeply entrenched with that industry or the sector or the theme, and you know a lot about it, much more than what a normal layman would know, and you know that the prospects are really bright, that's when you really go out and get into those sectoral thematic funds. But otherwise, our first calling is avoid. And only after thorough due diligence and matching with an investor profile is that when we typically go out and give a call on any of the NFOs.
Take that point.
Especially the sectoral ones.
Yes, exactly. So, Mohit, did some of the NFOs stood out for you in 2024? Something that you should have thought that investors could have invested in, not so bad?
Look, again, if I have to pick few names, I think Motilal Oswal Digital Fund, which happened just recently, was a good one. Honestly, I think this entire digitization theme, the theme overall on the IT pack, we've been fairly bullish on the IT pack for some while now, and the overall theme encompassed a much larger canvas. So that was one. There have been few passive factor-based funds which have gone through in the year. Some perhaps on the momentum side and some on the value side. I think on the factor-based investing style, again, I've been pretty vocal on that. We really like the factor investing styles, and out there, momentum plays and value plays. I think those were good NFOs. Which were available in the year. There was one through ICICI Energy Opportunities Fund. Again, a very niche play. If really someone is keenly plugged into that theme and has a large risk appetite to digest some amount of volatility, then that could have been a reasonable play. So these are a few names which caught our fancy.
Okay, interesting names there. Nirav, you want to add on to that? Some of the NFOs that stood out for you, the energy theme, I think you like that as well.
Yes, so the energy theme, I've been really vocal about my love for energy as a sector across forums. So SBI and ICICI both offered an opportunity to play the energy theme very specifically. SBI and ICICI both, in fact, distinctly on the energy thematic play. Apart from that, on the index-based play, a very recent ones around capital markets is something that I really like. Right, so Tata is doing some good work there. Edelweiss is trying to do some good work around the ETF side of it as well. So capital markets also a wonderful theme. So I feel some highlight themes that this year offered were energy and capital markets. Of course, there have been a slew of innovative themes, but I would put these two at the top of the table.
Okay, take that point. So energy is definitely that is being liked because there's so much anyway happening in that space. But again, valuation something, or the rally that we've already seen, and after that, some of the moves that we've seen is something that is putting a lot of focus on the space. Very interesting chat. I have a lot more questions, but we have to take a quick break. On the other side, we'll continue our discussion with our experts on that big NFO rush and specifically the flows coming in from sectoral funds this year. Stay tuned.
बजकर 55 पर नीलकमल नाम की एक जो प्रवासी वेसल थी उसको नौदल की एक बोट टकराने से एक बहुत बड़ा अपघात हुआ है, एक्सीडेंट हुआ है। इन 13 लोगों में 10 सिविलियंस है और 3 नेवी के लोग हैं जिनकी मृत्यु हुई है। जिन लोगों की मृत्यु हुई है उनको सीएम रिलीफ फंड से 5 लाख रुपए दिए जाएंगे। और ये जो पूरी घटना है, इस घटना की तफ्तीश ये पुलिस भी करेगी और नेवी भी करेगी।
Still tuned into MF Corner. We still have with us Nirav R Karkera, the head research, Fisdom and Mohit Gang, co-founder and CEO of Moneyfront. Well, we've been discussing what's been causing the NFO rush so far in November, but we still have 12 days of December, and we've seen some NFOs in December as well. Nirav, let me start with you. What are some of the NFOs which are interesting? How would you evaluate them? Especially wanted to talk about SBI Quant Fund and Kotak Conglomerate Fund. How do these look to you?
So SBI Quant and Kotak Conglomerate are, one thing very clearly, it is unique. These are distinct propositions. In fact, there are hardly a few quant-based funds offered by the mutual fund industry. So SBI has joined the very short list that is already out there. In fact, if you look at the asset base of this theme also, it is a very small percentage of the total equity AUM that is being managed by the industry, right? So it is a foray in the right direction. We believe there's a lot of promise that quant as a theme, as a method holds. So SBI's foray into it is very well appreciable. Kotak Conglomerate is playing a very, very distinct theme, and the theme is something that I am particularly very optimistic about. We believe that conglomerates offer an opportunity for value unlocking in the time to come across through various levers, right? So there is a very strong case for conglomerates. In fact, along with Kotak, a few more AMCs are also working on the same theme. So, and also, goes without saying that some of these conglomerates stand to benefit from, the same factors that benefit the bluest of the blue chips, that is heavyweight balance sheets, clean P&L, strong cash flows, high moats, etc. Right? So, amazing theme that way. I feel both of these themes are very distinct, but however, at the same time, like my view stands on NFOs in general. There is no need to rush headfirst into an NFO, no matter what, unless it is a close-ended fund and there is a super, super strong fitment and an urgent need to, make use of this opportunity. Because no matter what the fund, you will always get time to enter it, as long as it's an open-ended fund. And, there's no harm in waiting for 15 days to a month to wait and see how is its portfolio constructed. At least that is the bare minimum waiting time that an investor should have. So, probably wait till an NFO becomes an FO, just a fund offering and not necessarily a new fund offering within the NFO period. You'll always have plenty of time to get on board and play the particular theme. At least wait till you get to see the portfolio through the disclosures. And then if you want to be slightly more sane, wait till a few more cycles play out. But if you are in a rush, at least wait till you see the portfolio disclosures. That should give you a higher sense of conviction and clarity in terms of what are you getting into.
Looks like everyone has conviction at the start only, Nirav, and that's why we've seen that kind of, excitement across NFOs, be it the mutual fund investments or stock investments also. That's why we have these discussions, so that experts like yourself can also guide when patience is required and you just go all out and invest your money. But let's talk about the mid-cap space and the small-cap space. Mohit, let me come to you. No mid-cap NFOs launched in 23-24. There was one small-cap fund launched in 2024. Is this a category largely addressed across AMCs and we won't see a lot happening here? Do you think it's taken care of across the industry?
Look, Sonal, as I said at the start of this conversation, that most of the larger fund houses and AMCs already have a scheme on the shelf in the mid cap and small cap category. So, as per SEBI rules, they can't have a different scheme on the shelf. Hence, it leaves very limited AMCs who don't have the schemes on the shelf right there to launch a new NFO. That's why we haven't seen a new spate of offerings. Plus, for the newer entrants to come and offer a new NFO in this space, I think it's across the industry. The general view is that mid and small caps have rallied a lot. The valuations are extremely high, and it perhaps might not be the right time to launch a new scheme at this level, right? So I think that's the whole reason why we don't see any mid and small cap NFOs. The larger one being that there is no shelf space available for a new launch in the industry.
Okay. So, Mohit, do you think 2025 could see even higher NFOs versus 2024 in terms of numbers and fundraise?
Look, honestly, Sonal, this is something like there was a time when movies couldn't gross 100 crores at all, right? It was a distant dream. Then came an era where 100 crore, like every third movie catches up with a 100 crore number. Like 500 crores become a reality, and 1,000 crores is something which few movies catch. And so is the case with this NFO bandwagon. I think it's not so much to do with new launches and the money being collected. It's just about to do with the disposable income which is available with the Indians at large and the financialization of savings which is happening in particular. To my mind, I think this is a movement whose time has come, and you can't stop this juggernaut from rolling on. From 200, pretty soon you will see 500 NFOs in a year, and from 1 lakh crore you will see maybe 2 lakh crores and even higher numbers pretty soon. I think that's just the nature of the beast we are dealing with. But my final point here, Sonal, is that every movie, you need not go and watch first day, first show. You can just wait for the reviews and other things to come out. Perhaps you might just want to avoid it once you get the reviews and once you see the noise pass out.
Maybe there'll be an OTT alternative to NFOs as well. Who knows? We are constantly, seeing innovation in the mutual fund industry as well. Nirav, your thoughts and your closing comments on NFOs in general as well.
So I believe 2025 will be yet another year where we will see a lot many innovative NFOs come to market. In fact, I am very hopeful that we will see a lot more innovation on the passive side as well. In fact, I'm expecting the passive side to start offering more innovation beyond slices and dices of factors and multi-factors in various proportions, right? So there's a lot of scope for innovation there. On the active side, I can expect the larger fund houses, considering how they have been around for several cycles, and they have seen various themes and sectors play out very closely. On the active side, we could start seeing some very good thematic offerings, not sectoral as much perhaps, but thematic at least. So that's my expectation for 2025 in terms of NFO flows. Also on NFOs, the general view would be there is, like I said, there's no need to rush in head first. It's not a train jo chhoot jayega, uske baad pata nahi kab aayega, right? So no need to rush in head first, to wait for the details to come in. The primary, do not forget the basics, right? That's my number one advice, whether it comes to NFO or investing. Do not forget the basics. If you want to invest with deep conviction, and conviction is built through information.
All right, point very well taken, gentlemen. Thank you so much for joining us with your thoughts and insights and guiding the investors on how to go about NFOs in general as well. A pleasure speaking with the two of you. And with that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.